Please, can you sort that out? Yeah. Hello? All right, mate. We're good?
Xavier, can you hear me?
Yes,
can you
mate.
hear me,
Yeah,
Xavier?
I'm ready for you. Yep.
Well,
All good? All set up?
I think so. Thank you very much for your patience. Right here. Good afternoon, good morning. Yes, I can. Yes, I can. Good man. Right. Good afternoon, good morning, good evening, wherever you are. Thank you very much for joining us.
There's some repeat, isn't there? There's some recording repeating.
Yeah, there's an echo, isn't it? Bear with me. Jesus Christ. Yeah, I'm trying to record it, but I don't know what I'm doing now. God's sake. That is better. Right. I think we are in now. So, good afternoon, good morning, good evening, wherever you are. Thank you very much for joining us. This is Startup Fundraising Q&A. It's our 126th session. And we've been doing these for almost 4 years now, where we've helped founders with whatever questions you may have in terms of your fundraising journey. Whether you want to know when's the right time to look into fundraising, who do you go to, what you should do about it, perhaps how to get your pitch deck done, or maybe how much you should ask for, how to prepare for due diligence, and all that jazz. Really, there is no right or wrong question, and there's no need to be shy. It's a learning curve for us all. The idea is quite simple. I've got the amazing Xavier Ballister with us today for the next hour. Well, now it's 56 minutes. Who'll be taking any questions you may have in terms of that fundraising journey of yours. For those of you that are tuning in via LinkedIn or Facebook or YouTube or Instagram, please be aware that unfortunately we're unable to monitor your questions there. Therefore, you would need to join us here on Microsoft Teams and do that interactively in order for you to be able to ask us questions. You should have a link on all of those platforms where we're streaming this. Therefore, you would be able to quickly just register, and then you'll be able to come into Microsoft Teams, basically. Just a reminder, if you have questions that are not on fundraising, but they're on other needs you may have, please save them for the other rooms or conversations that we run. On Mondays, it's talent. On Tuesdays, it's product and tech. On Wednesdays, it's growth. On Thursdays, as you can see today, it's fundraising. And then on the second Friday of each month, we're doing one on UK startup law. And on the third Friday of each month, we're doing one on startup finances. They're all from 12 to 1 p.m. UK time. And you may be able to RSVP to any of them via our website, startup2scaleup.club. Actually, the best thing to do probably is to actually go to our website and also join our WhatsApp group. There you'll be able to get alerts for all the Q&As that we run. Now, without further ado, we're going to go through some quick introductions, and then we'll open it for questions from the audience. If you are on here on Microsoft Teams, all you have to do is put your question in the chat, and then I will give you the mic so that you can ask the panel, basically. And again, if you're tuning in via Facebook, YouTube, Instagram, or LinkedIn, please be aware that unfortunately we are unable to monitor your question there. Now, without further ado, my name's Anton Call. I'm an Albanian in London working with startups normally right after they get investment. I embed within their teams and help them hire and keep the right people. I also do some growth advisory work. And lately, I've been helping some angels and family offices with their due diligence and assessments. And now, Xavier, the floor is yours, buddy.
Thanks, Anton. Hi, everyone. My name is Xavier Ballister. I'm a director over at Angel Investment Network. We've been going for 20 years. We've got 40 networks of angel investors around the world, covering about 90 countries. I work on our broking team, which helps usually UK businesses, although we're starting to do a bit more in Hong Kong, Singapore, and Switzerland. But yeah, my little team works hands-on with 2 companies a week to go and actively help find angel investors, usually working at seed stage, so that there's some traction in the market, but not quite at the level for VC/institutional investment. We're totally sector agnostic, and yeah, I think we've raised something like 150 million pounds in those 10 years for startups.
It's brilliant. Thank you very much
Right,
for that, Xavier. Yes, I can. That's brilliant. Thank you very much for your intro, Xavier. And we've got plenty of time since, unfortunately, you're stuck with me today on your own. What are your biggest do's and don'ts when it comes to early stage fundraising for you? And that means basically, you know, go as extensive as you want, and don't worry about repeating yourself, because unfortunately, founders seem to make the same mistake all over again.
Yeah, I mean, there's so many. I mean, I say it every week about or every time I'm on here about being investor ready, and that means so many different things, not just in terms of the documents that you have ready to show investors, the ones that you have in your data room once they want to do more due diligence, but it also involves timing. When should you be raising? All these different aspects. So being investor ready, which I'm sure we'll go into via people's questions today, because a lot of the questions are really about that. But yeah, just don't go out to investors half-cocked. Don't be slapdash about it. Don't be hasty, because if you do show a kind of facade of not being ready, of being slipshod, then that will really count against you. And with investors, you only really have one chance. If you mess up with an investor, it's very, very rare that they're going to come back to it and say, "Oh, okay, well now I do believe you. Here's a check for 100 grand or something like that." So, yeah, be as investor ready as you can, which means talk to other entrepreneurs, to anybody that has been involved in this ecosystem. Show them what you have. bounce it off as many other people as you can before you go out there, because if you go out there too early, it's going to be detrimental. Did you hear
Well,
that?
thank you very much. Yeah, I'm sorry, it's just me and my fat thumbs,
Okay,
unfortunately.
no.
But no, those are some really good points, Xavier, and I really appreciate that. And I've put a question in the chat, Xavier, if you'd like to read it, and then I'll read it out loud for the others that are tuning in via other platforms. Can you hear me now?
Wow, yeah, okay. It's quite a
Yeah,
long one, this one.
it is,
So
unfortunately.
you
But
want me to read that?
no, I'll read it out loud, but just read it whilst I quickly explain to everybody, because I can see some people that are tuning in via other platforms, but unfortunately, um, I'm unable to monitor their questions. So again, just a reminder, can you hear me?
Yeah, I can, mate.
Yeah, perfect. Just a reminder to everybody, if you're tuning in via Facebook, Instagram, LinkedIn, YouTube, please be aware that unfortunately we're unable to monitor your questions there. So you would have to join us here interactively via Microsoft Teams. And I've put a link to Microsoft Teams, today's Q&A, on all of those platforms where we're live streaming. All you have to do is just click on it. It's a quick registration, and it will take you to us here. When you're here, if you've got questions, all you have to do is put that question in the chat, and then I will give you the mic so that you can ask the question yourself. Today, we're taking questions on anything to do with fundraising, whether you want to know, first of all, are you investable? Is your business investable? Should you go to an angel or a syndicate like Xavier's, or a VC, or should you try and get some loans or other means of funding like grants and crowdfunding and so on? That's one. Should it be, what should you do about your pitch deck? How many pitch decks should you have? How much you should ask for? How do you meet and speak to investors? All that jazz. This is the place to ask your question. There are no wrong or right questions for that matter, and there's no need to be shy. We're only going to be here for the next 47 minutes, and trust me when I say that that time goes quicker than we'd like to. Therefore, I'd appreciate it if you don't leave it for too late. On the other hand, if your questions today are on other matters and not fundraising, then save them for the other rooms we do. So on Mondays, it's talent. Tuesday's product and tech, Wednesday's growth, and Thursday's fundraising. Second Friday of each month, it's one on UK startup law, and third Friday of each month, there's one on startup finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our site, startup-scaleup.club. And actually, to make it even easier, you might want to join our WhatsApp group. You've got a link of that, an icon of that on our site. And there you'll get alerts for all future conversations that we do. Now, without further ado, I'm going to read a question. Now, I'm not a huge fan of these questions that come in because we don't have the people here to ask any follow-ups. But I specifically picked this because it seemed quite long, so I hope it's detailed enough. Now, I'll read this out loud now for those of you that are listening via LinkedIn and the other platforms. So this is from somebody in Bristol. She's got a seed peer-to-peer marketplace for renting specialized equipment. They're co-founders, and she goes on to say, we've developed a peer-to-peer marketplace for renting specialized equipment, which has gained early traction. We've already raised family and friends rounds, and now want to raise crowdfunding to expand market presence and begin monetizing. I'd like to structure an equity crowdfunding round that does not complicate future cap tables or dissuade institutional investors at Series A and or beyond. Now, what we're planning, now that we're planning a crowdfunding round, we're concerned about structuring terms to avoid later conflicts with institutional investors. With Series A as our next as our next target, what are the best practices for structuring voting rights, minority protections, or potential exit terms to maintain simplicity in our cap table and attract follow-on investment? Also, what strategies can help us align expectations between early crowdfunded backers and prospective VCs, especially, regarding investor updates, secondary sales, and preferential share options. Our goal is to finalize our crowdfunding terms so they ensure long-term alignment without restricting future strategic decisions. I'll give you my quick 2 pence, but then I'll pass you on to the expert here. If you're going for crowdfunding, normally, so I don't know which platform you're going with, but they tend to have quite robust process in place anyway, and they would help you with this. My advice is definitely find a lawyer, and actually feel free to join us not next Friday, the second Friday of February, which will be the 14th of February on Valentine's Day. Join us for our legal Q&A, and happy to help there. But personally, I think just don't overcomplicate it. Go with the crowdfunding details on how to structure this. But one thing I would say is try to have people ready before you actually start, because most of the crowdfunding campaigns I've seen, the ones that were successful, already had more than half of the money already committed. Xavier, any thoughts on this, buddy?
Yeah, lots of thoughts. It's a big one, this one. So as Anton said, if you're going with Crowdcube or any of the other ones, they should have a system in place whereby all investors go under one, usually an SPV. It's some kind of thing to gather all the investment together, so it stands alone on the cap table. So that's not a problem. And also, if it's, as it sounds like it should be, S or EIS, then the shares are homogenized. They're all kind of same. So don't worry about voting rights and all that kind of stuff at the beginning. It won't detract from VCs further down the line because it's not too messy on the cap table. I would say with crowdfunding, don't put all your eggs in one basket on that front. I don't know how much you're raising, but let's say you're raising 500,000. I would start with angels. As Anton says, you need to come with money to the table. You're not going to find everything from the crowdfunding platform itself. I would also make sure that when you sign with the crowdfunding platform, you tell them that the money that you bring in yourself shouldn't be charged anywhere near the full commission that they charge, because often they charge you maybe 7% for money that you've brought in yourself. So yeah, try and get them down, but maybe out of, let's say, 500, raise 100 on a crowdfunding platform. So it helps maybe spread the word marketing wise. So you spread your name a little bit by doing a crowdfunding campaign. But if you're a marketplace for specialized equipment, then smaller investors on crowdfunding platforms might not necessarily be your audience anyway. So yeah, they put one part aside, but I would start with angels if you can, because it looks more impressive if you filled part of that around before. Just make sure that you're not paying full commission on that when it gets added to the overall campaign funds on that crowdfunding, whether it's Seeders or Crowdcube. Don't be scared to ask for things like that. Like maybe if you tickets of over 20,000, which you're bringing in even after you started on Crowdcube, I don't think should qualify for them charging you commission. You've done the work to find them. You're just using their systems and their SPV or whatever thing they're using to gather all the investors together. So yeah, I'm just looking through this question, see if there's anything I've missed. on that.
While you're doing that, Xavier, just to clarify, so are you saying that some of these crowdfunding platforms, for the angels that you bring in, you can actually negotiate with them not to pay a
Yeah, at the
commission on them?
beginning, be open with them and say, look, there's a likelihood that I'm going to bring some decent chunks. Even, I mean, you'd hopefully bring them on before you start the crowdfunding campaign. But even as the crowdfunding campaign has started, you might be still in discussion with a few angels, and they might be bringing 25K, 50K, whatever it is, and that might even come on board while you're doing the crowdfunding campaign. So I would, make sure that Crowdcube or Seeders know that, look, we are still talking to other people. I don't think we should be paying full commission on what we're bringing further down the line. That I've known that to happen. If you just sign with them, then they will charge you 7% on anything that you bring in, and they're not going to bring you that much via their platform. So I've known of late crowdfunding campaigns where you're bringing 90% of the money yourself. You had to go and find it. So I don't think you should be paying full commission on that. But the structures that they use are fine going forward for further, for VCs further down the line. It's not going to complicate things. Just having
Interesting.
Yeah.
Interesting. Yeah, no, feel free to have a look. I didn't think they are that flexible.
They
But
can
if
be.
that, yeah,
I've known it to happen. You just got to go to them before and have a dialogue. It's like
exactly, yeah.
like any commission or anything like that. Negotiate. You're an entrepreneur. Try and get yourself the best possible deal you can. And the thing is, start with angels.
Indeed.
If you go to an angel platform like ours, for instance, obviously I'm going to talk about ours, but for us it's a flat rate per month. You're not getting charged a commission. But for my team, for instance, if you work with me on the broking side, I'm going to charge you 7%, but on money that I find from my network that I've spent 20 years building and tens of millions of pounds filling that with investors. That's fair enough. But if you're bringing investors externally from someone like Crowdcube, you should try and push the point of, we are bringing money from outside, and see what you can get. You're an entrepreneur. You're a negotiator. Make everything work as well for you as possible.
Fair enough. Thank you very much for that, Xavier.
And
I think
don't be afraid to go to Crowdcube and Seeders and see what both are saying, and say, look, and see with one, if you give me this option, then I'm more likely to go with you than the other one that might not be giving me the option.
That's a good point. Actually, yesterday I was asked by somebody, this is in the Q&As, but an event I went to at TikTok, actually. And I was asked, is it common, or is it easy, or doable rather, I think she said, to raise from multiple platforms at once? Have you seen that happen? What's your view on that?
I haven't. No, not from both crowdfunding platforms at the same time. I haven't seen that. But for instance, I know people that are raising on Crowdcube that will use our platform, Angel Investment Network, or other angel networks, to try and find angels to drive them to the crowdfunding platform, because that could work as well.
I see. Okay, now it makes sense. Fair enough. Thank you for clarifying that. Xavier, I'm going to put another question in the chat. I've already done it. And I'm going to read it out loud just for those that are tuning in via the other platforms like LinkedIn and YouTube and Facebook and Instagram. By the way, for those of you doing that, please be aware that unfortunately we're unable to monitor your questions there. And you'd have to join us here live on Microsoft Teams. For those of you that are here with us on Microsoft Teams, All you have to do, if you've got any questions to do with fundraising, and that could be anything from, are you investable? How do you check if you're investable? Should you go to a crowdfunding platform, angels, syndicates, grants, loans, VCs, and all that? Or perhaps you want to know how to get your pitch deck done, or how to pitch somebody, or how to reach out to investors, or maybe you want to talk about valuations. Anything that is related to fundraising, just pop your question in the chat room, and then I'll give you the mic where you'll be able to ask the questions. Again, if you're tuning in via these other platforms, please click on the link on the Microsoft Teams link there, and you'll be able to join us straight here. But for now, we'll go to another question that was sent in to us. This is quite, again, a bit long, but this is from a hydrogen fuel cell development. And by the way, I should have put it here because I looked them up, and they are in academia, Javier. And they go on to say, we're moving to London from the EU. They're pre-seed. Now, they've gone on to say, our current situation is that we're developing a hydrogen fuel cell for industrial use with high initial R&D costs. The team has no revenue yet and is considering a cost-based valuation to attract angel investment. Question. Now, our hydrogen fuel cell startup is at pre-revenue stage with significant R&D expenses, but lacks revenue or comparable valuations in the market. Given the need for heavy capital research, we are considering a cost-based valuation approach for our angel rounds. What specific cost factors, such as prototyping and patent filings, should we emphasize to justify our valuation without appearing overly optimistic? How do we approach valuation with potential investors who may expect traditional revenue multiples? Oof, boy, that's another mouthful there. Xavier, if you're not asleep.
Yeah. No. I mean, look, these kind of, presumably impact startups, right? Hydrogen fuel cells. I would be looking at this stage across as many grant applications as possible. There are a number of them out there. There are companies that can help, especially if you're coming from the EU to the UK and you're still getting to grips with a new ecosystem. There are companies like Granttree that will be able to help you navigate the grant landscape. But I would say, if you have these kind of high level costs, R&D costs, before you can generate any revenue, before an MVP or whatever it is built, I would go along that route. Also, potentially accelerators or incubators specifically in those kind of fields, of which I know there are some. Obviously, off the top of my head, I can't remember, but try and get as much help from the state and incubators as you can. Then, as you're using that initial money for the R&D, you'll be able to look at valuation in a bit more detail. At the moment, valuation, I think, is going to be very difficult to pin down. So start with that. Just get involved in the ecosystem as much as possible. Get as many ideas. But yeah, I think grants will help you get to a level whereby you'll be the valuation will start to become a bit more scientific and less of an art form, if you see what I mean.
Fair enough. That's a very good point, Xavier. And same here. I would go even further and say, don't worry about valuations at this point. Now, I know, yes, it's nice to have a higher valuation, but that can also sometimes be a disadvantage. So
Yeah,
just
it can
exactly.
be a win-win.
Absolutely. And, these guys, they seem to be, from the EU. So I would definitely follow that grant route. Depending on what you're doing, the EU has got some brilliant schemes for both grants but also investment. I would also, again, if what you're doing can be used for has like dual usage, basically both defense as well as commercial. NATO's one innovation fund and two accelerator called Diana. They're doing some brilliant work at the moment. And in terms of R&D, when you're in the UK, you're saying you're moving here, there's quite a few R&D tax benefits that you can get. Obviously, you need to kind of adhere to the rules, etc. But that's something to look at as well. But I would definitely just don't worry about valuations right now. You know, it doesn't really matter whether it's 50 mil or 5 mil. What you should focus on is getting to that next stage. And, you know, from, again, I wish you were here so that we could perhaps go into a bit more detail, but
yeah, that's the thing.
Exactly. When from what I can see on the message that you've sent there, it looks like you've got a long way to go. Just focus on that, because that kind of business strikes me as the kind of stuff that would probably take years for you to be commercial. So don't worry about valuations. I know you don't want to lose, and probably coming from academia, you may have to give up in terms of IP. You may have to give to your institution whatever percentage and shares. But again, don't worry too much about that. Focus on getting this done. You know, I often say this, Jeff Bezos, if I'm not mistaken, has only got about 8% of his company. And, you know, it took years to get to where he is. And same thing with yours. Focus on building what you're doing first, and then valuations and all that stuff will come later. Because guess what? If you are not doing things right, nothing will matter. If you're doing things right, then you have ammunition to command higher valuations and all that jazz. So, yeah, I guess that's about it. Thank you for that, Xavier. Right, a quick reset of the conversation. We've only got 27 minutes to go, so please don't leave it for last second to come up with questions. This is Startup Fundraising Q&A. It's our 126th session. By the way, we've had over 270,000 people join us in almost 4 years, and none of that would have happened without people like Xavier and his fellow panelists. So feel free to show him your love, follow him on Facebook and LinkedIn and so on. On the other hand, also feel free to share and spread the news of these sessions. We moved from Clubhouse to LinkedIn to now here on Microsoft Teams. So I guess we need all the help we can get to spread the news. But on the other hand, for those of you that are tuning in via our live streams on LinkedIn, YouTube, Facebook, or Instagram, please be aware that unfortunately we're unable to monitor your questions there. So if you've got any questions on fundraising, you'd need to join us here live on Microsoft Teams and then type your question in the chat and I'll give you the mic. In terms of your questions today, they can be anything to do with fundraising, from when's the right time to raise, how much you should ask for, who you should go to, how do you prepare for it, how do you get your pitch deck, how do you prep your due diligence, and all that jazz. If, however, your questions are not on fundraising, then save them for the other events we run. Mondays, it's talent. Tuesdays, product and tech. Wednesdays, growth. Thursdays, as you can see today, it's fundraising. Then second Friday of each month, it's legal, UK startup law. And third Friday of each month, it's UK startup finances. They're all from 12 to 1 p.m. And you can RSVP to any of them via our site, startup-to-scaleup.club. And by the way, if for any reason where you're watching this live stream, you can't access the link that I put there for Microsoft Teams, you can always go to our site now and look for Startup Fundraising Q&A 126, and you will be able to join us through there here on Microsoft Teams. But you can also there on that site RSVP to future rooms. And actually, my advice is also look at joining our WhatsApp group, which the link, the icon is there on our site, and therefore you'll be able to get alerts to all future rooms. Now, without further ado, I think we can go to another question that was sent in. Let me just read it out loud. I'll just put it in the chat, Xavier. So this is a travel tech founder. She's based in London at seed stage, used to be a travel agent. Then she goes on to say, we've developed a platform for booking sustainable adventure travel experiences. The challenge is that investors are concerned about the niche market size for eco-conscious travelers. How do I present data showing that the demand for sustainable travel is growing? And what key financial forecasts should I emphasize? Good question. Nice and short.
I mean,
and details as well.
Yeah, I don't think it's necessarily that niche anymore. Eco-conscious traveling is something that's growing, and I think if you can show that the market itself, that part of the market is presumably growing at a faster rate than the rest of the travel industry, which is, presumably, building at a reasonably level pace. I would expect that the eco-conscious travel section to be growing at a faster pace. So you should have that data if that's what you're going into, and that's what you should be presenting in your deck. And any kind of research that you have on that should be in your data room. So the top line stats should be in your deck. The forecasts put, I would say at least 3 to 4 years of financial forecasts. Now that they're always kind of finger in the air, but I think investors like to see them, to see what you're aiming at, but also to see things like the margins, because you're going to show overall revenue, then net revenue, EBITDA, those kind of things, so that they can see what kind of level of costs you're anticipating, those kind of things. So yeah, put those in there and put the backup data that you're using in the data room, so that when they see the deck and they think, okay, well, I've been convinced by this founder that this is something I should be looking into, but I'm not just going to take their word for it from this data in the deck. Have an asterisk on the deck and what you're alluding to, and then you can either put it in the appendix of the deck or in the data room, and you should have a well prepared data room for when people want to do their due diligence once you've attracted their attention.
That is brilliant. Thank you very much for that, Xavier.
There's also, oh no, sorry, that's a different question. EdTech, the next one.
No, sorry, I've just sent that in as well, because I can see that the people that are here, they're being a bit shy on Microsoft Teams. Then the ones that are on other platforms
can only send in via chat. Okay,
text. Yeah, so they can only. So I can't give them the mic here, basically, but I can already see people trying to send.
Yeah, hopefully it persuades people to come on to
Microsoft Teams
next time, so then we can have a conversation, because then it's good. You can really go into more depth on each question.
Absolutely. And, there's nothing beats interaction, because I can see a few of them are trying to send me messages even via LinkedIn and even bleeding Instagram. Yeah. But seriously, if you're not here, we can't really help you that well. So please feel free to come and join us here interactively. Nevertheless, another question that has come in is from a NedTech founder based in Leeds, pre-seeds, a former teacher, and then goes on to say, we've been bootstrapping our EdTech platform, but growth has been slower than expected. How do I assess whether it's time to seek angel investment? And what factors should I consider when deciding between continuing to bootstrap or raising external capital from early stage investors? Well, my quick input on this before I pass it on to the expert is the number one factor is whether you've got money to go on or not. If you don't, you either shut shop or you try and find investment. Xavier.
Yeah, I mean, it sounds like you've got to that point really on this bit. You usually can feel that pinch when you need to then go and seek external funding. Now, obviously, if growth has been slower than expected, you need to look at the reasons for that, because investors worth their salt will work that out. And if growth isn't going to, go at the rate that you might have expected, could be because maybe the market isn't quite ready, you haven't got quite product market fit, whatever it is. But yeah, once it sounds like you've got to that point. If growth has been slower than expected, then hopefully you've got some traction in the market. That's what you're talking about in terms of growth. So if you have some traction in the market, hopefully that shows investors that people are using the product, and that now it's just a question of marketing, and maybe obviously a bit of funds to keep improving the technology, as you always have to. But that is hopefully the next stage. And angel investment, this sounds like a good point to be maybe triggering the SEIS round, because investors are going to get that 50% back on their tax bill, and also if things go wrong within a couple of years, then they're going to get more back. So it's a big incentive. So hopefully that 250K round of SEIS will be the one that shows with some marketing you can get these numbers built up, so that when you get to the next round, you're basically telling investors, look, we just need to put more fuel on the fire, and then we're gonna really expand here into the market.
Thank you very much for that, Jeff. I really appreciate it. Rightio, we now have 18 minutes to go. This is Startup Fundraising Q&A. It's our 126th session, and we're helping founders with whatever questions you may have on your fundraising journey. Xavier is here for an hour today, so another 18 minutes to go. And the idea is that you can ask anything to do with fundraising, and we'll do our best to answer it based on what Xavier sees day in, day out, really. On the other hand, if your questions are on other matters, please remember we run 6 regular sessions helping founders for free. Mondays it's talent, Tuesdays product and tech, Wednesdays growth, Thursdays fundraising, second Friday of each month it's UK startup law, and third Friday of each month it's UK startup finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our site, startup to ScaleUp.club. And actually, when you go to our site, please also feel free to join the WhatsApp group. There's an icon of our WhatsApp group both at the top and the bottom of our website. And that way, you'll get alerts to all future conversations that we have. On the other hand, for those of you that are now tuning in via Facebook or YouTube or Instagram or LinkedIn, please be aware that unfortunately we're unable to monitor your questions there. So you would need to join us here live on Microsoft Teams. And the way you can do that, it's quite simple. There's a link on all of our streams where you can join us. Just click on that. It's a few seconds registration, and then you can come straight onto Microsoft Teams. And if you're here, then you can just type your question in the chat, and I'll then give you the mic. It's that simple. I guess we can go to another question that was sent in. So it seems like today's the day where we answer letters from the listeners. I'm not sure if you saw this, Xavier, but this is a biotech founder. She's in Oxford, seed stage. She is a geneticist, and she's asking, we're preparing for our first angel round and have questions about structuring shares. Should we issue different classes of shares to founders versus investors? And what are the implications of doing so on future voting rights and exits? Very good question. probably best for our legal one, but nevertheless, what's your thoughts on
I
this?
mean, from obviously the legal one is probably you'd be able to go into more depth on this, but um, top line is that it sounds like this company would easily qualify for SEIS and EIS, as it's a UK business, and it is important if you're in a UK business to, if you do qualify for SEIS and EIS, to get it because it's such an incentive for UK investors. Then this point is moot because you have all the same types of shares under there. So it's just nice and simple. Everybody gets the same shares, and you move on. Maybe once you get to VC rounds and stuff like that, there might be changing. But on a seed round, this is the first angel round you're doing. So hopefully you qualify for SCIS. That's for the first 250K, and everybody will get the same shares. So don't worry too much about different classes of shares at this early stage. Get apply through a company like Vested, we like, or Seed Legals. They'll be able to hold your hand through that and get your eligibility sorted out for SEIS, and then crack on with your business. Hopefully attract some good early stage investors.
That's brilliant. Thank you very much for that. We are going to go to some more questions, I guess, that were sent in, but I'm trying to find, because for some reason lately most of the questions we've received for the fundraising one are actually questions on, you know, how to structure things. So
Yeah.
I'm guessing that is quite the theme, and I often see that. So
I mean, I was going to say to any listeners, feel free to connect with me on LinkedIn. Just put something like startup fundraising Q&A in the top. I get a lot of connection requests. So bear with me. It won't be necessarily the next day that I respond, but I do usually respond to everyone that does connect with me that has something to do with raising, because a lot of people's questions are specific to their business. So I've been doing this for nearly 20 years and I love doing it. So I'll be happy to go into more detail on people's specific questions. And you never know, maybe we even end up working together on trying to find money for that startup. So yeah, find me. I'm easy to find on there. I think there's a link on Anton's page or the adverts.
indeed, yeah, yeah. So you should, if you click on the event here on Microsoft Teams, there's a profile, a brief profile with Xavier's details. All I've put there really, it's his picture and LinkedIn profile URL, or you can just look up on our LinkedIn page, Startup to Scale Up Club. The last post has also got Xavier tagged, so you can find him there. We now have 12 minutes to go, so perhaps I guess we should go to another question that was sent in, unless there's somebody here from the ones that are here live on Microsoft Teams. If you've got any questions, please don't be shy. Just type your question in the chat and I'll give you the mic. But this
Or you can
one
raise
is
your hand, right?
exactly. You can do that too, and we will give you the mic too. Without, if you're not keen on typing the question first. In terms of other questions, so this came to us quite a while ago, but for some reason, every time I mean to put it to the panels, we tend to kind of run out of time. So I promise that I'll answer it as soon as I can. So today we'll do that. This is from a cybersecurity tech founder, Xavier. They're based in Belfast, seed stage, and he worked as a security analyst. And then he goes on to explain, we've received a term sheet with liquidation preferences that we're not fully comfortable with. How do I navigate negotiations around liquidation preferences without scaring off potential investors? And what's considered reasonable for early stage UK startups? Good question. I have a feeling they might have already dealt with this because this was sent I think a couple of weeks ago. But I think it would be good even for the others listening if you've got any thoughts on this, Xavier.
Yeah, so presumably you went into more detail on the legal side. But I think if keeping its top line to hopefully be of use to others on this call, whatever it is that you'll propose, if you're not comfortable with it, firstly discuss it with other people within obviously your network, other founders. I am a big proponent of due diligence, not only on them with you, but you with the investor, because having the wrong kind of investor on board can completely sink your company. If you don't do the proper due diligence, you just get, you see the money and think, yes, I'm just going to leap into bed with these people, but they turn out to set very stringent milestones that if you don't hit them, then they can take more of the company, bits like that. You might be bullish now, but they might realize that there's going to be some hurdles that are going to get in your way, and that they can skew things in their favor to maybe even take control of the company from you. So due diligence on who your investors are as well. If they are investors worth their salt, then they should not mind you asking for references, maybe other people in their portfolio who they've invested in, that you can maybe go and speak to and say, look, how have things gone? Or if you see other people in their portfolio, even approach them and say, we have been approached by X or Y, and just doing our due diligence here. I'd love to hear a little bit more about how the whole process has gone. Don't be worried about scaring people off. They should appreciate you standing your ground a little bit. If you feel that that's both sides should be aligned. So if you are feeling that the balance is more in their favor, then the chances are that you could lose interest in your company more quickly, so everything will fall apart. So don't be worried about that. Just just make sure that both sides are comfortable, and you do proper due diligence.
Well, thank you very much for that, Xavier. Really appreciate it. Radio, I've put another question and I'll read this again for those of you that are tuning in via LinkedIn, YouTube, Facebook, or Instagram, because first of all, just remember, I am unable to monitor your questions there, and you'd have to join us here live on Microsoft Teams. There's a link for you to do that on all our streams. You can find the Microsoft Teams, but if for any reason you can't access that, just go to our site, startup-to-scaleup.club, and you'll be able to look for today's session, which is Startup Fundraising Q&A 126. If you click join there, it will take you straight onto Microsoft Teams. Quick registration, and then you're in. Although we're only going to be here now for the next 6 minutes, but for those of you that are here on Microsoft Teams already, all the others that want to come in quickly, there is time for one more question, I guess. So please don't leave it for last second. Nevertheless, if we can go through this as our last one for now, Xavier, I'd really appreciate that. So this is from a health data tech founder. She's based in Oxford, pre-seed. She's a biostatistician and wants to move to London as well, I think. So she goes on to say, I'm exploring EIS and SEIS to incentivize angel investors for our health data platform, and also planning to move to London, I think she meant. What specific compliance should I have in place before marketing the tax benefits to potential investors? And how can I manage their expectations around EIS/SEIS related documentation? Any thoughts on this?
Yeah, so it sounds like you should definitely qualify. So most people tend to do it through a company like Vested or seed legals, but you don't necessarily have to have the full approval all stamped. There's a pre-approval, and then while the main approval is getting sorted out, which can take, I mean, anyway, between 4 to 8 weeks, I think. You can be looking for investors and marketing as S or SEIS approval, so that you're doing that side by side. So you're not waiting necessarily for the full thing. Crack on with your raise. Say you have pre-eligibility, you can prove that with a document that you've received that you have pre-approval, and then get cracking, and then hopefully the full approval arrives, and investors are won't mind that at all. In fact, it's probably looks good in their eyes that you're getting moving, rather than just sitting there waiting, twiddling your thumbs for the main one to be granted. So yeah, don't worry about that. Get cracking once you've got the pre-approval.
Brilliant. Well, thank you very much for that. Xavier, we've only got 4 minutes left, but I don't think we'll have time, even if somebody wants to come to Microsoft Teams from the other platforms. And the people that are here, I can see they're being shy. So perhaps we should call it a day. And before we do that, though, I'd love to hear on two matters from you. Number one, your parting words, and you can leave that for the end. But number two, what are your predictions for this year in terms of raising investment, and what do you see out there? What do you reckon will happen?
I mean, it's been a rough couple of years for raising funds, the various kind of economic ill winds and things like that. A lot of investors sitting on their hands. With interest rates being high, they can make their money work in other ways. And while, startups do get affected more than larger businesses when there are shifts in terms of cost, supply chain, all these kind of things that have affected companies at the moment. So it's been tough, but there are some signs early this year that things are starting to get a bit better. Hopefully, the interest rates will keep going down, so it'll incentivize people to invest rather than sit on their money. So yeah, there are some positive signs after a couple of gloomy years there. So I am, cautiously confident that we might start crawling out of this rut this year. And with that in mind, parting words are just make sure you give yourself enough time to raise. A lot of companies leave it a bit too late. They don't realize that it might take a bit longer than expected, especially with the way things have been the last couple of years. So yeah, don't leave it too late, because it could be that the rug gets pulled out from underneath you just for the mere fact that you didn't get investment on time. Also, if you are getting to that point where you need that money desperately and you've left it a little bit too late, then investors can, they'll smell that blood in the water and maybe beat you down on valuations and get more out of you than you would have wanted to give away at this stage. So yeah, give yourself plenty of time before you raise, and yeah, just talk to as many people in the industry as you can. It's a very much a fraternity, these entrepreneurs, because it's such a rough road that there's a lot of people that are there to help share their knowledge on what they've experienced. So yeah, don't be scared to ask people's questions. Go to events, speak to as many people within the ecosystem as you can.
That is absolutely brilliant, and I'm really grateful for your time and input today, Xavier. I know it wasn't easy, and normally, to be honest, it's not very easy when it's just one panelist, because then kind of everything falls down to you having to kind of come up with anything and everything. But again, I really appreciate it and really look forward to you joining us again in February.
Yeah, no problem at all. And yeah, as I said, I'm on LinkedIn. Just make sure you label it as being through here, because I do get a lot of connection requests, and I will try and answer your questions and help as much as I can.
Brilliant. And yes, exactly. For those of you that sent in questions that we answered today, if you've got any follow-ups, one, either join us next time live, or two, reach out to Javier via LinkedIn. Now, a sort of quick reminder to everybody, we run 6 regular conversations helping founders for free. Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of the month, UK startup law, third Friday of the month, UK startup finances. They're all from 12 to 1 p.m. UK time. You can RSVP to any of them via our site, startup to scaleup.club. And actually, when you go there, probably a good thing to do is to actually click on the WhatsApp icon and join our WhatsApp group. That way, you'll receive alerts for all future Q&As we do. Remember, those of you that tune in via our live streams on Facebook, Instagram, LinkedIn, or YouTube, we are unable to monitor questions there. So next time, please join us live here on Microsoft Teams. And just remember, the startup journey can be both exciting, but also quite challenging. So try to have some fun and be kind to yourself and other people too, for that matter. And have a great weekend, and hopefully see you on Monday for Startup Talent. Thank you, and God bless. Bye-bye for now.